So we are live now and we welcome you
Yes,
to today's session. For the participants, we have CMA Rahul Chincholkar sir for today's webinar on input service distributor. He is a practicing cost accountant with over 15 years of experience in this field. So we welcome you to the session and we request you to start the session, please. Thank you.
thank you, ma'am. At outset, I appreciate and place on record my sincere appreciation for Tax Research Department of Institute of Cost Accountants of India for arranging this CEP on the very important topic. And also a special thanks to the chairman of Tax Research Committee, CMA Ashish Thatte sir, for giving me opportunity to share my certain views on the topic. Having said that, uh, this particular mechanism is already in place and it is already in the uh, started from 1st April 2025. And many of us might have already guided to our clients. Also, few of you might have already, as a working professional, you might have started, but there are many things which needs to be discussed. So what I have done, there will be a PPT wherever required. I will be sharing the screen. Otherwise, the majority of the times, I will keep the PPT as it is. For administrative purpose, since I have to switch in to the normal screen. I am going to keep my screen shared only. So you may feel that there is no PPTs are not changing. So don't worry, I'm not changing that PPT. Many times without PPT, I am going to discuss with you. So right now the opening PPT screen is available, which says the input service distributor and the opening thing. So that will remain there till I am going to discuss. Whenever specific thing is there, I will share that specific slide and then we may discuss on the specific issues. So don't worry if the PPT will not change. Having said that, normally what happens that as far as the GST Act is concerned, there are around 174 section. And of course, this section 20 was there since 2017. And this ISD provision per se, it is not at all new. It was there, but it was not having that importance which right now we are having. So this suddenly from 1st April 2025, this particular provision is into a very big limelight. Now, before we go, who are the direct impact? So there is the only the assessees who are having multiple registration under single PAN. So only those assessees are going to get impact on this particular provision. Then assessee having head office and branches, maybe in the same state where they have added the additional place of business, probably they are not going to have any impact. So additional having additional place in the same state, definitely they are not going to get any hit out of this particular provision. But only those assessees having multiple registration, maybe in the same state or in the different state, but they are having a multiple registration, then this particular provision has a direct impact on them. Secondly, those for whom the RCM is going to be compulsory and ISD is also applicable. So in that case also this particular provision is going to hamper a lot. So the first part is why this is applicable directly from 1st April 2025. Though we have said that this provision was there since 2017 when this particular act got enacted. So what happened that in one of the assessee side, the audit was happening. So in one of the bank, there was audit was going on. The head office was in Mumbai. So I'm just giving you the background why this particular provision is now becoming that important. So one of the assessee, their head office was in, let's say in Maharashtra. So audit was happening. They found that at head office, many credits are getting accumulated, whereas the cash payment is very less. because the accumulation is there. So what is the problem? Why the cash payment is happening? Then they found that since it is a head office, all common services were getting credited to the head office account where the normal registration was there, and then they were paying the output tax liability using that credit. Then the very fundamental point of the GST came into the picture. That is, the entire tax is, you will agree that it is a consumption based tax. So wherever the state which is consuming the part of that input service, that particular state should get the revenue. Because as you are aware, it is a not origin based but destination based tax. That means the person or the state to whom the services are being consumed, that state will get the share of revenue. Now, if I see the structure of the GST is that that particular state will get the share of revenue once the assessee is going to claim that credit and he is going to utilize that credit. Then that particular state will get the share of revenue. Now let us assume where the head office was there in that bank case, the credit itself was getting availed at HO only. So the branches were not at all claiming the credit. As a result, there was no flow of the input tax credit to other state where it was registered. As a result, that other state was not getting any credit. So as a result, then this point got discussed in the GST Council also. And then it was discussed key, okay, this particular situation where the credit is not getting, it is getting distributed, but the particular state is unable to utilize this particular ITC. Then this particular point was discussed in the GST Council, and then it was well taken. Yes, there is a revenue distribution, there is a problem. So I will just quickly share my screen again for the PPT. So in this case, what they have discussed is that the receiving state is not getting the share of revenue. As a result, there is a loss of that particular state's revenue. Then it got discussed. Then the discussion happened that there are two ways. One is the cross charge and another is this ISD. Now, if you all remember, we have seen the circular which was issued 199 circular, which was issued and it made the position very clear. In 2023, they issued this particular circular and the circular made it very clear what is cross charge and what is ISD. So this discussion happened in GST Council meeting as well, that okay, cross charge by virtue of this 199 circular, you said that wherever they made the two branches, wherever there is a credit is eligible and where the credit is not eligible. So wherever the credit was eligible, they said that even if you cross charge by 1 rupee or at actual, we are okay with that. We are not going to challenge the value wherever the branches are eligible for full ITC. So what with this circular, wherever the credit was eligible, they said that you may cross charge or nil value invoice will be also considered as you have done the cross charge, wherein they introduced the term called internally generated services, where they said for internally generated services you have to do the cross charge, and if the credit is eligible, whatever price you will charge, that will be considered, where they gave the reference of valuation rule 28 related party transaction. So as good as one can say that where there is a situation, if the particular assessee is registered with multiple states, all the states including the HO all are eligible for the credit. By this circular, the position is clear that okay, if the credit is eligible, cross charge probably not required, or whatever price you will do, that is sufficient, being a revenue neutral. But ISD, which was not mandatory before 1st April 2025, cross charge by 2023 became an optional. So technically what was happening, all the set of those assessees where they were operating multiple state-wise, all the states were eligible for the credit. Cross charge was not that mandatory. ISD was not mandatory. The other states were not getting the share of common ITC's revenue. All those cases, the revenue department discuss and say ki, okay, the share of revenue should be transferred to the respective branches so that they will claim the credit and respective states will finally get the share of revenue. Now, to my mind, technically speaking, this is where the political will as well as the state level authorities involvement directly is there, because there is a loss of revenue. So probably there will not be a situation that not many of the assessees will get covered in this particular provision, because many of them are operating single registration. But all big size companies, they are directly going to get covered in this provision. Though the full ITC is eligible, they were not doing cross charge or very nominal amount cross charge. ISD by before 2024 Finance Act, it was not mandatory. So technically all the credits were getting clubbed at the registration where the HO was there. Now, to avoid this particular, I will go back to the provision. To avoid this particular aspect, they changed this particular definition of input service distribution, section 2 bar subsection 61, wherein the new provision is there, and both side I have written new, but one is new and another is old one. So the left side is the new one, which where I have written in red, liable to be distributed. So in this particular provision, they have added or changed the input service distributor by saying that he is liable to distribute the common credit. Second change in section 20 they have made is that they have simply said that as per section 20 previously, it was only he may distribute the ITC. That was the wording. They changed that he shall distribute the ITC. Now with this two change, one change in the definition, another change in the section 20 manner of distribution, it became mandatory from 1st April 2025. So the chain of change is from that discussion that common credit was getting accumulated only at one place. So how to give the share of revenue to the particular states, then discussion happened about cross charge, but then it was said that through 199 circular, now it is not necessary because credit is eligible. So now what to do? So they made the input service distribution as a mechanism. Instead of facility, it became the obligation. Now it is a mandatory. So they have created another route, which will be the compulsory route, that if you are operating in such format where you are multiple registered, now though you are not following probably the cross charge mechanism, but ISD will be compulsory. So they have found this particular route, and this is the what you can say the fundamentally this is the starting point, or the invention which they have made in this particular provision, that this is one of the route they have invented by which there will be a transfer of ITC from the head office to respective branches, so that the respective states will get the share of revenue once it is claimed and utilized in the respective GSTR 3B of respective states. So this is a background why they have made it compulsory from 1st April 2025. Now, when they discussed this point, they also thought what is to be done about RCM. Now, with variety of procedures already there, variety of reconciliation already there, variety of confusion already there, they have further added this particular issue, that is reverse charge mechanism. So ISD definition, what will be the ISD definition in that case? They have also added 9394 and 5354 of CGST and IGST respectively. So the reverse charge mechanism, whatever tax payment is made, which is a common in nature, that is also required to be distributed through ISD. So that is also added. To my mind, this definitely it is a really a complex world. It is going to have a lot many impact, which we will try to discuss one by one. But the practically speaking, I believe this is a full-fledged work which we are doing for the various states, various stakeholders, that is department, but there is a zero gain to the assessee. So to me, there is no gain. I'm not getting anything. Practically, I am doing the work of department only. In fact, as you will agree that one of the fundamental section of GST, that is input tax credit, by having that section 16 subsection 2 clause C and AA, where we are ensuring that my vendor is tax compliant. In that case also, I am actually doing a work of department only, that they should actually go and check whether all assessees I have filed their return and paid the taxes correctly or not. But by virtue of that to be reconciliation, I am ensuring that they are tax compliant. With this further procedure which they have what I can say bulldozed on all the assessees who are with this multi-state model. Now they have to again do the work of the department only, because by doing this ISD registration and distributing the credit, technically speaking, I am helping to those states to get the share of revenue, but I am not getting any benefit out of it. Probably my lot of cash component at HO may increase. My working capital I have to manage accordingly, because all import of services where RCM is there and those are common, these are going to get distributed, and then again individual states are going to get the share of revenue. So with this background, one can say that this is definitely a beneficial to the department, to the states in specific, but not directly to the assessee. Having said that, the definition they have made the changes. So from 1st April, it is going to get applicable. It is going to be a compulsory only, and for industry, lot many effects with respect to the accounting, with respect to paperwork, with respect to the physical documentation at branch, again documentation at HO, regular registration and ISD registration. So all the bifurcation is required. Then RCM, one more aspect which needs to be dealt very critically. So this is going to really impact to the assessee. In fact, the assessee having not a bigger size ERP, but normal ERP, or they are using a ERP which has not good functions, but they are operating in multi-states. They are going to have definitely a big issues when they are going to do the accounting changes. So definitely a worry to them. So as far as the section 24, which is a compulsory, it was definitely having this particular provision that ISD is a compulsory registration you have to take. Separately registration you have to take. Now, as I told you that there was a not requirement in the GST law, the section 20 and section 16, 61 of subsection, section subsection 61 of section 2 definition, both read together. Before 1st April 2025, it was not mandatory, but after 2025, it is very much mandatory. And therefore, I have to take the separate registration wherever there is a common ITC is getting club and the beneficiary is not that particular state. Quickly, though in the background I have discussed little, but this 199 circular has a direct impact on this particular provision, because now there will be a hair split exercise between what is internally generated services and what is common services. Because at head office, internally generated services, I mean that there are accounting services, there are you can say HR related services, there are procurement services, sales and distribution services, where the employees of the company are supporting to the branches or the other registration. These are the internally generated services. And there are common services, that is auditor services, cost auditor services, tax audit services, internal auditor services, banking services. There are common marketing expenses, which is where the beneficiary is entire company. Now, in that case, I have to split here, do this hair split exercise, that which are the services required for HO to function, which are the services required for normal registration as a HO to function, and which are the services are company as a whole, but for accounting beneficiary or for administrative purpose, it is just booked at HO. So all these three elements I have to bifurcate, because let's say head office is on rental basis. So it is also a service taken by head office. Now head office is providing services. So what is to be done for the rental services of head office? Whether those rental services are used by head office for providing internally generated services to the branches, or whether it's to be considered in the ISD. So probably people will have their own interpretation. I will say no, it is head office services. It is not ISD services. The beneficiary is head office. So I make club in cross charge when I'm cross charging to the branches. But this is my view. Probably when the officer will come, he may have his own application. He will say no, because see, if you do ISD, he will say no, why you have not done cross charge. If you have done cross charge, he may say why you have not done ISD. Definitely it is going to have the concern. So as I told you, there has to be a hair split exercise between all the expenses which are booked in the head office. So probably I will have to make the bifurcation. What are the services which I am taking for the head office for performing the head office duties, and what are the services those are merely booked at head office, but the beneficiary is entire company. That's hair split exercise or splitting. I have to do it since that circular makes it very clear. So I have to bifurcate what is ISD and what is not ISD. Now here, quick a point. The name itself, input service distributor. So only services are to be considered. Goods, never it will come into the ISD. So it is only an input service distribution. So if car is purchased, which is used across the company, it will never go in ISD, nothing to do with that. But the repair, maintenance, insurance, and other charges, which is in the nature of service, probably they will come into the ISD if that vehicle is something for all the registration purpose if it is getting used. Just an example. So it is only for service, not for the goods. So this 199 circular is really important when I'm doing this cross charging. A quick suggestion here itself, though I will be covering later. If you find when you are doing that exercise of splitting HO related or ISD related, my opinion is that if you have a 10% or 5% feeling that ये particular जो है expense ISD में होना चाहिए, common है ये. If you have 5% only the probability you have in mind, my suggestion, take it into ISD. If the all the registrations are getting full ITC, better to take the in ISD, distribute it, take the credit and take the decision later on. Because this is really something which is a person specific. So if you say I have considered it in cross charge, he will say no, it is not cross charge, it is ISD. If you have considered ISD, he will say no, it was never ISD. It was for head office only. Why you have distributed? And mind it, my thought process, what I feel it going forward, if something is required to be considered as a ISD, but you have not considered and claimed in the regular registration of head office, then he will say no, it was never eligible to you because you were not the beneficiary. It has to be gone to ISD. Probably he may say I am disallowing it. And reverse, if you did the ISD and he says no, ये तो cross charge होना चाहिए था. So he will say no, you did the excess distribution, which was nothing to do with ISD. So now again I am disallowing what you have distributed. So this is just a thought which came to my mind that is very much a possibility, because though this circular has given certain direction, this has also confused also. It has only clarified with respect to internally generated and cross charge, more clarity they have tried to give. But definitely in case of conflict, what will prevail, that will be really an time will let us know how it will get settled. But definitely there will be a conflict between this split head office expenses required for head office to perform as a head office and common which is to be considered as a ISD. So in that case, whatever you have not considered in ISD, that also I have to see, and whatever you have considered in ISD, that also critically need to be monitored. Now when I'm doing this particular split, to my mind, a general principle can be followed that where the beneficiary is entire company, then it has to go to ISD, and where the beneficiary is that particular HO only, then no need of ISD, it should be considered as a cross charge. Like you have, let's say, a department, design department, which is helping all the particular construction companies there, and design department is there, which is operating in HO. Now in that design, you have considered, you have taken the third party employees also. So on contract basis, you have taken certain employees. Now in that case, those employees are ultimately your employee, not permanent employee, but hired employee. Now they are performing the duties and they are giving the services to the various branches. So it is, I will say it is a internally generated services. So it has to be cross charged. Now in this particular example which I am taking, the department may take a view, there could be both views. Department may take a view that no, the hired employees are using their efforts where the entire company is beneficiary. So it has to be routed through ISD. So why you have done the cross check? So I have to keep the theory ready that no, as a function, it is a design services which is provided by head office to the all branches. Few are done by the permanent employees and few are borrowed from the borrowed resources. But ultimately it is a HO who is providing the services. So we have included the cost in the cross charge and we have done the cross charge. So, but definitely in those cases, the department may take the alternate view also. So as I told you, this why I'm though you may feel that we are talking both the side, but it is the fact that it has the both the colors for the same transaction. One can apply that this is ISD also, one can say no, it is a cross charge only. Therefore, I said this 199 circular is really important one, and the time will tell us that how this will have the impact. All these services, hired services at HO, where one can say the beneficiary is HO, one can say no, it is a beneficiary company as a whole. So when I am doing this split, I have to be very much clear that whether the beneficiary is company as a whole, then better to take ISD. So the case which I have narrated, that I have taken the hired employees, if the entire company is eligible for full ITC, better consider it ISD, distribute it, and then say no, it is for company as a whole, I have distributed. But the question will remain whether it is ISD or it is a cross charge. I have to keep the theory ready. It is a really a question which has a different answer when the authority will come. Authority will come, because the authority of head office. So let's say my head office is in Mumbai and my registration is allocated to the state. Now, the mentality you can understand when the state will come, state officers, he will always say that there should be lesser ISD. Just I'm giving in a thought process, because the whatever I am going to distribute through ISD for Maharashtra state, the revenue is going from Maharashtra to other state. So as a revenue officer, he will try to say नहीं, ये ISD में था ही नहीं, मेरा रेवेन्यू इधर ही रहना चाहिए. सेंट्रल वाला आता है तो ही विल हैव अ डिफरेंट वे ऑफ लुकिंग एट. दिस इज अगेन माय assumption and my visualization what may happen, because the root of this provision is based on revenue distribution only. So probably the local state officer, once he will reach to my office, he will say कितना ISD में किया है, जितना ISD में किया उतना share of revenue is transferred from Maharashtra to other state. So probably he may start questioning, नहीं नहीं ये तो ISD है ही नहीं. Why you have considered it ISD? You should have considered it in cross charge, and by that 199 circular it was not required. So you have unnecessary excess distributed. So this type of discussion probably may happen in future. We don't know. It may happen. We don't know. Just before I go ahead, so far, so now whatever we have discussed, you may just give a thumb or OK to the chat box so that I can understand that you are aligned with what I am saying. So maybe 3-4 thumbs or OK, that will really help me whether you are aligned with me or not. In the chat box, you may just raise your thumb or you may say OK. That will help me to understand. In the chat box, you have that facility where you can put your question also. There also, if you could put it, that will also help. So this particular bifurcation is very much required in this particular provision when I'm going. So circular number 199 is very much important. Few of them are writing that slides are not moving. I've already told whenever required at that time only I'm going to refer that slide. Otherwise slide will remain still as it is. Now moving forward, the manner of distribution. So far as what we have understood is that why this is compulsory, and then what the expected result out of it. Now the technicalities, the mechanism which is given in section 20. So what section 20 says that any officer or any that particular office where he is going to take the common services and everything, if you will read the definition, the second last line, it says that shall be required to be registered as an input service distributor. Now this shall be word is very much important, as we have in the background discussion. I said you that section 20 is referring the word shall. Therefore, there are plenty of registration cases where it says when it is a shall, it is a very much mandatory. So therefore, if I am having that situation where the multiple registration is there, I have to take the registration separately as ISD, and then I have to distribute the credit, input tax credit separately. Now, for that, they have come up with this regular register services and the common RCM services also. Now, let us assume that there are services of GTA which the HO is taking, but those are for regular registration, normal. No need to club that common GTA services to this particular provision of ISD where the RCM credit is to be distributed. So here also, so we have just discussed that normal expenses, I have to make the bifurcation between HO expenses and ISD. Similarly, for the RCM expenses also, I have to make the bifurcation, which are the for HO and which are for ISD. So those which are for ISD, that has to be through ISD and need to be distributed accordingly, which we will discuss in the latter part. So section 20 makes it very clear that I have to claim the credit and I have to distribute it. So they have made the mechanism also clear. CGST, SGST, how to distribute, IGST, how to distribute. Now here, one point I wish to make it clear that ISD is just a pipeline and he's just a custodian of that particular credit. So ISD per se is not owner. So he is just a custodian. It's a pipeline. So he has to just take it, distribute it. That's it. He will never retain that tax. Whether that is eligible, ineligible, he has to apply no mind. He has to just bifurcate it, eligible, ineligible, distribute it. So the ISD registration is the person who is just a custodian and the facilitator for that particular credit. Now, while doing so, they have given the power of conversion. So the CGST, HGST credit which I have taken, they have given the power to convert into IGST. If other states is there, then I can transfer it through IGST. If it is within the state, then IGST will get transferred as IGST only. No need, because as I told you, it is just a custodian and it is just a facilitator. So IGST credit received to the ISD will get distributed as a IGST only, whether this ISD registration and that HO registration, means normal registration, is in the same state. Doesn't matter, because as I told you, it is only the facilitator. Now, while doing so, they have just given power to convert that C and S to the I for the practical purpose. Now they have given the various rules how I have to distribute. For this purpose, the rule 39 is very much relevant. Now, before I move to the exact rule how we are going to actually distribute, after this particular rule, they have given certain definitions. Now those are very much I can say important, relevant, and has again huge impact, because see, normally if those who have already worked in the pre-GST era in the service tax regime also, there was this ISD mechanism was there, and more than obligation, it was facility at that time. In GST also, up to 1st April 2025, it was a facility more than obligation, but now it is obligation more than facility. So in service tax era also we used to distribute, but at the end of the period we used to recalculate the ratio and adjust that particular distribution. Now in the GST era, they have not given this particular facility. Redistribution is there, but it is only to the extent where I have wrongly considered some ratio. But after completing the entire period, again calculating the entire formula of turnover and then wherever it was short excess, that adjustment, this facility as such rule is or section is not provided. This is one point. And second important point, for distribution purpose, they have suggested to use the turnover. Now the turnover, they have said, if you refer this definition of relevant period, clause A, it says that if the recipient of the credit have the turnover in their states or union territory in the financial year preceding the year during which credit is to be distributed, the said financial year. That means turnover of the previous financial year is to be considered. Now this is again going to create a problem, because previous year's turnover, if I'm going to consider, then for normal manufacturing units, probably there won't be any concern. But the such service providers where they are into the project-based industry, where they don't know which state will have the project in which year. So probably let's say I have a 3 registration, one in Maharashtra, HO in Maharashtra, let's say 3 registration outside Maharashtra. Delhi is one of the registration. I am in project-based industry. So at Delhi, the site was going on. So this year, that means 24-25, there was site was there. So I used that percentage. But for 25-26, Delhi was not having any site. So there is no revenue. From 1st April 2025, there is no revenue to the Delhi. But I have to use the turnover of previous year. So 24-25 turnover I will be considering where the Delhi was having turnover. From Maharashtra, from ISD, I will be distributing that ITC from Maharashtra to Delhi based on previous year's turnover. Now Delhi will get that credit, but there is no project in Delhi, so that ITC will remain there only. So probably there I will have to invent some different route to utilize that credit. If I will not have any site, probably that ITC will remain there only. Every time, since I am going to use the previous year's turnover, I am going to block the ITC for some period where current year there is no turnover, but previous year it was there. And I am telling you, for project-based industries or the companies where the construction activities they are doing, in all those cases, definitely it is going to have the impact because of this previous year. Again, if the new particular site or new registration is added in between, which is clause B, if some or all recipients of the credit do not have any turnover in the financial year preceding during which the credit is to be distributed, the last quarter for which the details of turnover of all recipients are available, that is to be considered. That means if it is newly added in the current year only, so previous year it was not there. So whatever turnover it is there, that I have to additionally consider. In that case, again, there is a concern, I have to use the current year's current quarters, last quarter's turnover and for all the units, and then I have to distribute. So it is going to be a situation where there is a turnover, partially there is a turnover, partially there is no turnover. Based on that, probably for some specific time period, my ITC may get distributed, but probably it will not get utilized if there is no turnover, it will remain there only. So for project-based industry, definitely it is going to be an concern. As far as the procedure is there, every month I have to file GSTR 6 every month. On 13th, I have to file this particular return. When I'm filing this particular return, this is procedure which is given in the rule. So one of the provision for the distribution is that, as you all are aware, that section 16 subsection 2, which they have introduced the provision from 1st January 2022, that whatever credit is there in GSTR 2B, I cannot claim something in excess of may not able to distribute the credit unless it is appearing in GSTR 6A. So when I'm filing my GSTR 6, I have to first download 6A, do the one more reconciliation which I am doing like GSTR 2B reconciliation for regular tax, regular registration. For 6A also I have to do the registration, to do the reconciliation, and then that reconciliation, based on that, whatever is there in 6A, to that extent only I will capture, and then that I will consider for distribution. So certain points are there with respect to that. Once we will move further, we will discuss on that. Now, what is the formula? To that extent, the formula is very simple. I have to take out the turnover of that relevant period, that means previous year. I have to take the common credit divided by the total turnover, multiply by that respective recipient. So maybe 1, 2, 3, whatever registrations are there. Simple proportionate pro rata proportionate basis, I will decide the ratio, and to that ratio, my distribution will start. Definitely the this ratios where turnover was there, turnover is not there, we will have to work out. We have to check the ITC wherever it is getting populated in 6A, then turnover ratios, and then distribution. So immediate suggestion is that, like we are keeping independent file of GSTR 1 and 3B, a separate detailed file for this GSTR 6 is also required to be kept. So from account side, whatever purchases are booked to the ISD registration, this is one. Second, GSTR 6A, second. Third, the reconciliation statement. And the fourth, the distribution formula and distribution formulas attached to that particular working. So any time in future, if audit is happening at ISD location, at common registration, then I should be knowing that what was ratio working file ready and attached to that particular return. So it will be available. Now the interesting part over here is that if you could see what the T is talking about. So what T is saying, T is the aggregate of the turnover during the relevant period of all recipients to whom the input service is attributable. Now this is very important. So let us assume that I have, let's say, 15 registrations. I have taken ISD registration in Maharashtra. Now I have actually taken one specific technical services where the beneficiaries are only 4 units. So 4 branches are only relevant one. So they are only beneficiary. So probably one can say, it says that of all recipients to whom input service is attributable. So if that particular service is for those units only, but for the purpose of accounting, it is getting booked at HO, then I will put it into ISD. Then that particular invoice of that particular service will get distributed to only those 4 states. So when I'm calculating the formula, I will have to see that aspect also. So probably my suggestion in those cases, if it is possible, better you take 4 separate bill itself, book into the individual locations and take the credit, because it will reduce the complication at head office. If it is not possible, then this route you have to follow, and therefore the distribution working is very much relevant. The T which is available in the formula, they are not saying all the registration. They are not saying, they are saying all the recipient to whom the service is attributable. So I have to be very careful. So here what I suggest, that if I am aware that it is for particular branch, better book there itself. If not, if it is a common to all, then better book into ISD. But if it is a middle uh, transaction where the out of 14 only 4 are beneficiary, then I have to really apply my mind and check the possibility of getting 4 bill. If not, then book to the ISD and distribute to the 4 beneficiaries only. At this time, you may find it very much what you can say bookish, or only on theoretical basis. For speaking, I find it very easy, but practically I'm telling you, the way the provisions are formed, I am of the opinion this is the expected impact only, because as I told you, the state's revenue are directly involved here. If the only 4 states are beneficiary, and through contract, if it is directly visible that for 4 states only it was there, then definitely the other, if it is distributed to other state, it will be the excess distribution. It will be termed as excess distribution, and probably the officer may deny the credit to those respective states, as I can forecast this particular risk. So this particular line, all recipient to whom the input service is attributable, is very much relevant one. So I will take the registration, then I will see for that RCM. I will distribute the RCM credit, normal credit also. Then they have also given the account of credit, how I have to distribute. So if both are in the same state, ISD and the normal registration, then the form in which credit is given to the ISD, in the same form it will get distributed. So if ISD credit, ISD is getting the credit of IGST, CGST and SGST, both are in the same state, then it will get transferred in the same form. So IGST as IGST, CGST, SGST, GST, SGST. But if the ISD is in Maharashtra and the credit is to be distributed to a state other than Maharashtra, then IGST will get distributed as IGST, CGST, SGST will get distributed as IGST. So the conversion which I have told you, that is possible. So I can convert it and then it will shift, and then the recipient will take the input tax credit. Now the important aspect of the distribution. I'm sure many of you might have taken the ISD registration, but the only few might have did the distribution of tax exempt and tax, not exempt, sorry, the eligible and ineligible ITC separately. You might have taken the this registration of ISD, but in that ISD, you might have taken only the eligible ITC and you might have missed to distribute the ineligible. You might have ignored it. To give an example, at ISD, you have claimed the input tax credit of hotel accommodation services. There are two aspects. One is the accommodation services and second is the restaurant services. So restaurant probably there is a debatable point, but just for our understanding, 17.5 says that it is ineligible food ITC. It is debatable point that it says food ITC, but the input tax credit is the restaurant services. So it is a service, but we will not go into that. We will simply say the restaurant services are ineligible. So previously you might have taken the credit of hotel accommodation and might have distributed the hotel accommodation only. Since the ineligible ITC anyway remain ineligible, you might have not considered for distribution. But the provision since beginning it was clear that I have to distribute eligible as well as ineligible ITC separately. Now again, here the department is going to keep their eyes very critically, because whatever is the ineligible ITC is there is the state revenue, directly the revenue, straight away a revenue of that receiving state wherever I am distributing. So hotel accommodation restaurant is very small piece of transaction probably I'm saying. For few industries like IT or the construction based industry, the accommodation and this traveling is the huge expenses. But there is one more expenditure, that is a insurance. Normally head office pays the insurance premium. Right now we are not at all taking the credit directly, it is getting expensed off. Few of them following the 170 circular. So they are claiming it and then it is permanently getting reversed. So it is not eligible. Now through ISD, now what is required, that first I have to take it that service of insurance, healthcare or whatever insurance, that will the premium, whatever I have paid, the ITC will get first assigned to that ISD registration. It will appear in 6A. The ISD registration will consider that particular ITC for distribution. Then through GSTR 6, whatever credit on the insurance premium, it will consider and it will distribute. While distributing, it will distribute as an ineligible ITC. Then he will file, ISD will file the respective return. Then respective all branches, they will see in their GSTR 2B this ISD credit as ineligible. They will claim the credit in their GSTR 3B, and there in that particular state they will do the reversal, that is permanent reversal. And by doing this activity, the recipient state will get the share of revenue of that ITC which was ineligible. I hope you all are with me. I hope you all are with me. Now, when I'm saying so, the eligible and ineligible bifurcation is to be made while I'm distributing itself. Now, the problem is that if the person who is filing the return, if he swapped that amounts, so जो eligible में था वो ineligible में डाल दिया, जो ineligible में था वो eligible में डाल दिया. Difficult, because amendment and everything, it is really difficult. Redistribution may require to be done. I have to prove it whether it is correct distribution or not. This is a very much challenging one. I am going to have a problem when I am going to distribute something which is wrong, because the moment it got swapped, the recipient will have to react accordingly. Because if that ISD has distributed something as ineligible, probably he may not convert into eligible. Again, he will have to enjoy the local show cause notice why something was ineligible you have claimed. Now in this whole process, all the credits which originally I was not claiming itself, now I will have to claim first, and then I have to distribute, and then the recipient unit has to reverse permanently. So this is really going to create an accounting impact also. Originally, I was not claiming, so directly expensed out was happening. Now I have to create separate ledger to identify it. So from one state, it will be first ISD receivable. Then from ISD receivable, from ISD registration, it will shift to the respective unit. To the respective unit, it is ISD credit. They will take the credit. From that, they will reverse it, and then it will go to the P&L. So it will be really interesting one if such thing is not done. So at the time when it will get booked at HO, it will not get expensed out, because otherwise I will never understand in the bigger size of transactions. If accounting is not in support of what I'm doing in ISD return, then the separate set of Excel record will get generated, which is not matching with my books of accounts. So first ISD registration wherever I've taken, first it will be considered, then it will be distributed, then the recipient will take the credit, and then in that return he will reverse it. So this whole process, if my accounting software is not that able to accommodate this function, definitely I'm going to create a problems for me. So eligible and ineligible, both the ITC, which is common in nature, I have to take the credit and then I have to distribute. So the food along with the this accommodation services, which is common in nature, I have to claim it, then I have to distribute it. Similarly, the situation, just assume, if I wish to make little complicated, a company where there are certain products which are exempt. So there are taxable as well as exempt. So first from ISD, I have to take the credit, common credit, distribute it. Then the recipient unit will take the credit, and then he will reverse the ITC as per rule 4243. Common credit. Previously, it was only taken at HO, and then at HO it was common reversal was happening, where the ISD was not compulsory. Now from 1st April, it will be very much compulsory. And the cases where there is a situation of multiple states are involved, and there are supplies which are taxable and exempt as well. Definitely, it is going to add certain work. What will happen if there are exports? Probably not much of a concern. Even if there is export, no issue. Receiving unit may claim the credit and it can be utilized for normal payment of tax. No, not that a concern. But in case of exempt services, sorry, exempt supplies, maybe goods or services or both, in that case, the reversal of common credit has to be done in that particular state. So first ISD will take that, consider that common credit, it will distribute, and then individually the credit will be taken. Now, quickly the RCM. So rather before RCM, quickly I will give one more procedure. So first we have first provision with respect to the procedure that I have to take the registration ISD for all the companies where the multiple states are there. Second procedure, I have to file GSTR 6 every month. Third, I have to do the reconciliation with 6A every month. Fourth, I have to distribute it, eligible, ineligible separately, irrespective of that. Then fifth, with respect to this distribution only, one very important point, which it says that I have to distribute the input tax credit of that month in the same month. This is again something very problematic. Because let us assume that in the first month itself, yesterday only we all might have filed the ISD registration, might have taken, and return we might have filed 13th day. So on 13th May, I am filing the GSTR 6 of April 2025. Now, as per this provision, Rule 54, I have to issue an invoice. So ISD registration is there. The ISD registration has to take the credit, not consider the credit, distribute to the individual states, and for distribution, it has to issue an invoice under Rule 54. It will issue an invoice. Now, in the month of April, for the month of April, it will issue an invoice before 30th of April. But for what amount it should raise the invoice? That when that ISD registration is going to understand on 13th May. So it is like a backdated invoice I am going to generate, because on 13th May, I will find out how many taxpayer has filed their GSTR1 against the ISD registration, which will appear in my GSTR 6A. So on 13th, I will see the GSTR 6A. I will download it. I will do the reconciliation, and then I will find out, okay, out of this registration, out of this transaction, let's say 6A is having 10 lakhs of ITC. Out of 10 lakhs, I will find, okay, this is the out of 10 lakhs, only 9 lakhs invoices are with me. 1 lakh is not with me. So only 9 lakh I will consider. Then I will distribute, and then I will issue an invoice dated 30th April 2025. So this is again going to have a complication, because in the same month I have to distribute. This is one issue which we are going to have, because in many ERPs like SAP, probably backdated entries is not possible, but invoice is required to be done. But on 30th April, I don't know how much invoices will get booked, but I have to file the return on 30th May. In the same month, I have to distribute. Now, in that case, I have to issue an invoice dated 30th April, which amount I will finalize on 30th May, 13th May, 13th May, I will be knowing that amount, then I will distribute it. So this is again a problem which we are going to face when I'm actually filing the return. Now, while doing so, eligible, ineligible bifurcation is required. For eligible ITC, one invoice under Rule 54. For ineligible ITC, one more invoice. So if I have a 4 state where I have to distribute the ITC, I have to issue 8 invoices. One for eligible, one for ineligible, because same document it will not accept. GSTR 6 it will not accept. So while generating the invoice under 54, I will generate the invoice. Probably you can have the working paper attached to that invoice, so you will understand which are the services you have considered for distribution. So whenever there is an audit, you can produce. Secondly, the 54 under Rule 54, whatever invoice I am issuing, that invoice is not required to be an e-invoice. So IRN is not applicable to that. So I believe to that extent we have concluded. Now quickly the RCM, which is a one more difficulty. So this is something contents of the 54. What are the contents? So name, address, then serial number, 16 digit, date of issue, name, address, amount of credit, and signature. So simply I have to consider this invoice and I have to distribute it. So now I will just see the RCM. This is 54 1A is for RCM related. So quickly I will go RCM. Now this is very interesting to see. Now this RCM, what they are saying is that, let us assume that I am the head office. I have taken the registration of ISD. Now a common sponsorship I have given, or I am a multi MNC company. My head office has given certain technical services where the beneficiary is entire company. Now the RCM liability is there. Now we all are aware that from ISD registration we cannot pay the RCM liability. So the RCM invoice will get booked in my normal registration at head office. So head office will have a normal registration and ISD registration. So right now what we are doing at normal registration, while filing GSTR 3B, we are generating the liability, then we are paying the tax and we are claiming the input tax credit if eligible. So right now that we are doing. So the same procedure will continue. Now what is going to change is that I am going to take the ISD registration. Now the common RCM like import of services, which is a common in nature, or local RCM 13/2017 RCM notification. Maybe it is your director services, maybe your sponsorship, advocate services, common services. So if those common services are there, then what I will be doing is first I will have the normal registration. In that normal registration, I will consider this entire RCM liability. I will put it into GSTR 3B. I will pay the taxes. In normal route, I will claim the input tax credit also. Then what it says that the normal registration, wherever the normal registered assessee will issue an invoice to the ISD. 54(1)(a) is the rule. So from normal registration, there will be an invoice to ISD registration to transfer that ITC. So in the 3B, I will first pay the ITC. First I will create the liability, will pay the taxes, will claim the credit. Now when I'm filing the GSTR 1 of the normal registration, I will also issue an invoice under Rule 54(1)(a) for distributing that, for transferring that RCM credit to the ISD for distribution. So the normal registered person, I am kindly bear with me because it is little complicated, but still I will try to make it little more easy to digest. So the normal taxpayer will, in his GSTR 1, along with his normal liability, he will also create a liability for transferring the ITC from regular taxpayer to the ISD registration, where he will issue an invoice under Rule 54(1)(a), which is not IRN based, it is a normal invoice like ISD invoice. So he will issue an invoice. So there will be a liability of normal supply, let's say 1 crore, and the RCM, which is a common in nature, which he is to again transfer, let's say it is 5 lakh. So in GSTR 1, it will be 1 lakh plus, 1 crore plus 5 lakh in GSTR 1. While he will file the GSTR 3B, the normal liability will be, which we have created in GSTR 1, 1 crore plus 5 lakh, 1 crore 5 lakh, plus the RCM liability 5 lakh, then pay 5 lakh, claim 5 lakh, transfer 5 lakh. Since I am filing GSTR 1, in my ISD registration, it will appear in GSTR 6A. Based on the payment made in my regular registration, in my GSTR 6, I will consider that 5 lakh rupees for distribution. Then I will distribute that 5 lakh to all the registered location. Then respective regular taxpayer will take the credit against those ISD invoices which is raised. Now, to my mind, it is really going to add many compliances, because it is ये बताने के लिए भी, to explain I have to consume lot of energy and many words. While doing this particular provision, it is really going to have many questions, but the route is the same. First, for distribution of credit in respect of RCM, the registered person having the same will deposit the tax under RCM. Then the said registered person will issue an invoice to transfer the credit to ISD. Then ISD will distribute the ITC. For saying it is very easy, but for following, this is really going to create a problem. If I am having ISD, RCM is there, but I don't have the registration, then I have to first take the normal registration, pay the tax, then transfer the credit from normal registration to ISD. Then ISD will consider that credit and ISD will distribute thereafter. I am quite confident that either I have explained it or I have confused it, but I have tried to make it more clear. In RCM, definitely it is going to be a different challenge because the multi MNCs where there are many common services like a technical services or common software license services or maybe a services with respect to using the trade name or brand name. All these common services will fall into RCM. The RCM has to be paid in cash. It will be paid by regular taxpayer. Regular taxpayer will claim that credit, will issue an invoice by generating a liability in GSTR 1. Then it will get transferred to ISD. ISD will consider that credit, will distribute it, and again all the registered person will claim it. If the company is having taxable and non that is exempt service supplies, then they will claim that credit distributed through ISD. Then they will consider the rule 4243 for reversal of ITC. So mainly 42, 43 is for capital goods, probably if it is there, then it is, but otherwise through 42 rule, it will get reversed. So RCM again going to have the problem. So the quickly, what is procedure? So I have to take registration, then file GSTR 6, 1 to 13 important dates every month, then issue an invoice as per 54.1 and 54.1A. Maintain separate registration, registered for ISD, copies of invoice. Soft copies of 6A is very much relevant. And in case of RCM, keep a copies of invoices until the norm where the normal registration is there. So you have to keep the invoices there. As I told you, the distribution is very clear. If it is in the same state, ISD as IGST as IGST, CGST, CGST as CGST, CGS GST. If it is a separate, then CGST, SGST will get converted into IGST. Now ITC of the ISD invoices. So it is very clear that input tax credit, I have to consider that particular ITC and claim the credit. As per rule 36 also, one of the document, that is 54.1, which is considered as the one of the document for claiming the input tax credit. That means I have to issue a physical copy to every branches. Branches will have to store that copies of invoices, copy of GSTR 2B, and whenever there will be audit, they will have to produce these all the references when there will be audit for their particular registration. Then few challenges. Input tax credit available for distribution in the same month will be distributed in the same month. We have already discussed it is difficult because there are situation. One, we have already discussed that backdated I'm going to generate an invoice. Second is that I have downloaded the 6A. It is showing 10 lakhs of rupees ITC. Now out of 10 lakhs of rupees in the books of accounts, only 9 lakhs are booked. So first, don't take a chance to distribute 10 lakh only. Don't do that. My suggestion is that distribute only 9 lakh because the 1 lakh which is there in GSTR 6A but not in your books, probably the section 16 subsection 2 conditions are not fulfilled. You don't have invoice, it is not yet booked, so probably you should not be distributing it. So for that purpose, for that particular month, you will distribute only 9 lakh. Now in month 2, that 1 lakh got booked. Now you need to distribute it. Right now, when I'm filing my GSTR 6, I have to add the invoices. Either I can accept reject through that IMS system, which is there in place. So either I will accept reject or it will take an action. If it is not there, then facility to add the transaction is there. So right now you can definitely add the invoices for previous period. So let's say in the month of April, you have out of 10 lakhs, you have taken only 9 lakhs. So in the month of May, you have to now distribute that 1 lakh. So you can right now you can add it, but the provision says that you have to distribute in the same month. But the GST law, as per the GST portal, right now it is allowing to distribute the previous periods invoices. You can add in GSTR 6. So probably you may continue that you may add the invoices pertaining to previous period. But if you will try to add the invoice twice, so duplicate entry if you are doing, then as far as my experience is concerned, right now it is not allowing you to add this duplicate invoices. So for the same supplier, you cannot add the same invoices in one taxpayer period, and in the second subsequent tax period, again, if you are adding, then it is not allowing you to add. So that checkpoint is in place. But previous months or previous periods invoices, you can definitely add in the GSTR 6 for distribution. So this particular issue of same month is definitely going to add lot many challenges, because if I start distributing 10 lakhs, though it was not booked, then it will not match with my books of accounts. So I have to be very careful where the ITC is not there in books but available in 6B, 6A. Secondly, 6A versus 2B, there is a shift. So 6A is something which is changing. 6B is something, 2B is a static, but there is no 6B available. As far as the whatever 6A, if I see the instruction given, what it says that if someone, my service provider, so service provider to the ISD registered person, instead of filing his GSTR1 on 11th, if he has filed it on 12th or 13th, delayed, he has filed it delayed, then that transaction will appear in my GSTR 6A in subsequent month. That is what is the manual or instruction which are given, that is saying. So before 11th, whatever the returns are filed will appear in my 6A. If it is file delayed, then in the subsequent period it will appear. But it will be really interesting to see the variety of mistakes if my vendor makes, I will be the sufferer. Second aspect. So I have given the ISD registration number to my vendor. That case study I have not considered here, but I'm telling you as a continuation of this. So I have given the ISD registration number to my vendor. He has my regular registration as well as ISD registration. Now the wrongly for normal supplies, instead of considering my regular GST number, he has considered my ISD registration number. Now it is appearing in my GSTR 6A. Now my suggestion is that don't take that, consider that ITC in 6A for distribution. Immediately communicate to your vendor and tell him to amend his GSTR1. Because if you will consider that ITC which is specific for that particular normal registration for distribution, then it will say that it is an excess distribution, and probably the assessing officer may say no, I will deny the credit because it is excess. It was never for ISD. It was specifically for that particular regular registration. So this is again going to create a problem, mistakes made by my taxpayer, my vendor. Then distribution of eligible, ineligible. I have to be very careful. If I make the mistake, definitely I am going to pay the price. RCM we have already discussed. Accounting of claiming ITC, reversing the ineligible. This entire route I have told you. First I will consider that ITC in ISD, then I will distribute as eligible, ineligible separately. Then the recipient unit will claim that ITC. Whatever is the eligible, it will retain. Whatever is ineligible, it will reverse permanently. So we have to be very careful when defining eligible and ineligible. Previous year turnover and control over eligible ITC transfer as eligible or vice versa. Now a normal quick example, simple. So eligible and ineligible, total turnover, 5 branches, 10 crores is the totally I have to distribute the ITC. The turnover ratio is 10 is to 30 is to 30 is to 15 is to 15. Eligible is 80%, ineligible is 20%. So I will have to distribute the eligible, ineligible separately. So 10 lakhs will be distributed to unit 1, 8 lakh as a eligible, 2 lakh as a ineligible. Unit 1 will take 10 lakh credit and will do the permanent reversal of 2 lakh while filing his GSTR 3. Similarly, all other unit will also follow the same. Now I have the just 5-10 minutes FAQs few I have done. So first, whether ISD is compulsory from 1st April? Yes, it is compulsory. Whether just continuation question, whereas cross charge is compulsory? My answer is yes. Cross charge is very much compulsory where the ITC is not eligible. So if the cases where ITC is eligible to the branches, probably cross charge is not mandatory by reading circular 199. But cases where ITC is not eligible, then HO cross charge is very much compulsory by introduction by 199 circular. So where there is a head office and there are exempt and taxable service supplies, then 100% ITC is not eligible. So the cross charge is also compulsory and ISD anyway it is compulsory. So I have to be very careful where there is a taxable and exempt supplies in the particular entity. So both ISD and cross charge are compulsory. I have already clarified. How to distribute the ISD ITC. So we have made it very clear 6A. Then based on the ratio I have to consider and then distribute issue 54. As per rule 54, I have to issue an invoice. Take the IT set respective branches based on the GSTR to be filed by my ISD registered person. Ineligible and eligible, I have to distribute separately. Separate invoices are required. Whether actualization of turnover and redistribution is required. That means at the end of the day, again, I have to calculate turnover and ratio. No, it is not required. Once distributed is distributed. Redistribution probably not there. Now quickly here, when I am distributing under GSTR 6, I can issue an invoice or I can issue a debit note or credit note. This is one aspect. Second aspect, table number 9 of GSTR 6 related to redistribution. Now, what is the difference between credit note issued by a ISD person and redistribution? So let us assume that I have to distribute 1 crore of the ITC. The ratio in our previous slide, we have seen the ratio. In the same ratio, I was supposed to distribute. While distributing, I have wrongly reported the GST numbers. So जिसको 30% था उसको 20% वाले का GST नंबर कंसिडर हो गया और जिसको 20% था उसको 30% वाला हो गया. So I have shuffled the ratios unfortunately. So wrong credit got distributed. in that case my 1 crore will remain same, but the ratio I have to change. So in that case, I can do the redistribution. I can change that distribution. So there I can use the facility of redistribution. But the credit note I have to issue when my vendor who has charged me this particular services for which he has raised the invoice, he has issued me a credit note by reducing the credit of 1 crore. So he issued a credit note by which my 1 crore is now 90 lakhs. So since my input tax credit is reduced to 90 lakh, for that 10 lakh rupees from ISD, I will have to issue a credit note. So when there is a reduction in the basic input tax credit itself for which is available for distribution, I will issue a credit note. But when the distribution for ITC, which is to be considered for distribution, is same, but the proportion is to be changed, I will use the facility of redistribution. Explain the case where the ineligible ITC is claimed in ISD. So I don't mean by claimed, but considered for ISD. So in case the ITC is ineligible, common credit, then first ISD will accumulate it, then reconcile with 6A, then ITC will be distributed to the respective locations. Then that respective location will claim the ITC and then it will be reversed in respective GSTR 3B as a permanent reversal. If no regular is there, RCM is to be paid, then regular registration is required to be opted. So the way forward, first take the new registration, then communicate to all on selective basis, not all vendors, only those vendors to whom you are considering as a common ITC, to them only you share your ISD registration, like your bankers, your insurance players, your traveling agent, then your auditors, your common consultant, to them you give the ISD registration number, then create new ledgers for ISD. Then you have to keep a control on RCM mechanism. Then in case of ineligible ITC, special care is required to be done. And only one situation I am also not 100% clear is that if I am having the SEZ unit also, regular unit, SEZ unit, and now ISD is required to distribute the credit to SEZ unit. So not much comment on this, but I need to be careful while doing this distribution. So with this, I conclude my presentation. If there are certain queries, then I will quickly check my question and answer aspect. If there are certain questions, I will just answer to those. I'm just checking any questions are there in that question answer list. Yeah. CMA Nilabjo, they have asked one query. In case where the company A has its head office in West Bengal, where ISD registration is there, branches in AP and MP, where the vendor issues an invoice for services received by company with GSTN, should the vendor mention in the invoice the regular GSTN of HO in West Bengal or ISD specifically obtained for input service? Yes, sir. I believe I have already answered that if the service provider is a service which is common for West Bengal, MP and AP. In that case, that service provider should consider the ISD registration. Then at West Bengal, where you have obtained ISD registration, you will claim that ITC in West Bengal. Then as per the turnover of West Bengal, MP and AP, ISD will distribute that ITC and then respective units will claim the credit. I hope your query is solved. CMA Prabhu Mirashi sir has raised one question. Is there any possibility of losing ITC in case where the turnover is not happened in the previous financial year? There is a limitation of 6 months. No, so the limitation of claiming is there. You for utilization, probably there is no limit. So I can go on accumulating that credit whenever there is a liability I can utilize. So the limitation is on claiming, not on utilization. So section 16(4) is on claiming, not on utilizing. Sir is also saying compliance. Yes, sir, there is a compliance burden. One more is that HO received only one input services, that is audit fees. As per my opinion, no need to get ISD because of something. So I don't know who has raised this query, but I'm very clear that even if you are getting only one common services and you are operating as a multi-registered person, so multiple registrations are there. I have no doubt in my mind you have to take ISD registration, take that audit fee in the ISD, and from ISD you have to distribute the all unit. So it is nothing to do with one service, less service, nothing. Even if one service, section 20 is very clear, he shall distribute. So it has not limited to any percentage or number of transactions. One more query. HO receive only one input. Achha, before receiving the input, we have to inform ISD number. Yes, you have to inform before only. If he mess with the number, then probably he will have to amend the particular GSTR one. Jasraj sir has raised one query, sir, that might lead to earlier while adding previous month in the, sir, that may lead to error while adding previous month in the GSTR 6 of current month. No distribution trade invoices. I am very much in agreement with you, but claiming the credit in the same month which is not booked is more problematic. So my opinion is saying that you should not claim in the same month. Probably the subsequent month you may claim. HO receive only one unit. Which date? 13th. I'm not getting this query. Anonymous one question. GSTR 6A is available under normal GST registration or ISD. It is available only in ISD registration. What is the impact if previous year one branch turnover is zero? I have already answered to that. Since ISD is now compulsory, do you possibly of the audit of ISD unit as well? No. This is really an interesting point that as far as the audit is concerned, if you have excess distributed, then definitely my 73, 74, I will have to be very careful because it will be interesting because if excess distributed, then the recipient definitely there will be a problem. But what section 21 says is that where it is displayed where the input service distributes the credit in contravention of provisions contained in section 20 resulting to excess, the excess credit so distributed shall be recovered from such recipient along with the interest and provisions of 73, 74, now 74A shall be invoked. So the recovery will always be from 73, 74 from the recipient. So the all the uh, litigation will start at recipient unit definitely. One more query is RCM credit distributed to ISD is also required to be distributed in same month or in subsequent month after payment of regular. No, in the RCM right now we are paying the tax, claiming the credit in the same month. So probably, as I told you in GSTR1, I will be generating the liability in the same month. So invoice under rule 54(1)(a) will be issued in the same month in GSTR1. In 3B, I will be paying the liability. In the 3B, I will be taking the credit. And in 3B only, I will discharge the output liability which I have generated in GSTR1. So probably in the same month, it will get distributed because my GSTR 1 will be filed. So in GSTR 6A, the RCM related invoices will appear. So when I'm going to claim the credit of RCM which ISD is going to distribute, in the same month I am going to pay also. So to my mind, in the same month it is very much possible. ISD. So I believe I have answered the question which was there in question and answer. So if there are no questions, I wish to hand over to the organizer.
We thank you for your time, sir, and we thank you for the session. So we end the session now. Hope it's okay.
Yeah, we may just check one more time because last
sir.
question.
No questions are there.
So in the chat box also, I'm not seeing any questions.
Yes, sir.
So in case you have, there are many queries or there are some requests that you have to share the PPT. So I will definitely share my PPT and you will,
Okay, sir.
it will be available.
Okay, thank you, sir. We are ending the session now.
Okay, thank you all.